insurance is about risk, and us being able to assess risk as well as we can enables us to make significant savings elsewhere.
Okay, so what is this brand new, earth-shattering, world-changing AI pay-as-you-need peer-to-peer life insurance model all about, eh?
It's great when other people also seem so excited about life insurance as we do. I mean, we've come a long way in terms of where you can apply all of these various different cool things that you've mentioned. I think it's about time that it's introduced into life insurance, and it really hasn't been. AI and smart tech allows our users to quickly and in the comfort of their own home take out life insurance perfectly suited to their specific circumstances. I don't know of trying to get life insurance or meeting with anyone that wants to sell it, but it's not easy. This process, our process, through the tech and through AI has allowed us to give users life insurance without having to figure out what they need, when they need it. And in most cases, no medical requirements or additional requirements, personalization at the tap of a button.
Okay. So you're saying the basics of insurance, life insurance, are still there. It's just that you're making things easier for people. Am I right?
From a tech point of view, absolutely. It's about making it easier and quicker. And from a product point of view, I think that's where the peer-to-peer comes in. So I didn't touch on that before. Through the peer-to-peer, we're trying to put trust back into the insurance industry, something that may have been lacking of late.
Okay.
In South Africa specifically, there have been a few bad cases that came through. At a high level, what peer-to-peer does, or what it introduces, is premiums are paid by clients. We, as an administrator, take a fee to manage all the policies we have. Claims are paid in times of need, and then at the end of it all, whatever's left over gets paid back to the clients, and it's shared amongst the users.
Okay.
So from that point of view, it is a new approach to it, maybe an old approach for people that really know life insurance, but it's an approach that's not present anymore.
Okay.
Or not present today. And it's taken insurance from the kind of foundations of insurance, figured out exactly what it needs to be, made it just that, nothing more, nothing less.
Okay.
And then done it in a way that's not done elsewhere. Done it in a way that we believe will give users a better product experience at the end of the day, and hopefully, and we truly believe it, put trust back into the insurance industry.
Okay, I have to take you back to what you said. You said what insurance needs to be. So after all the research you guys did, what was it you figured were the top 5 basic needs that people came after when it came to insurance?
It's interesting when you say people come after insurance. That's not always the case. Often the case that insurance comes after the people.
Okay. So what is it that they believe they are investing in, so to speak?
Yeah, the main need that people often associate with life insurance specifically is the need to provide for your financial dependence if something were to happen to you, and the need to settle any debts or cover any costs related with unfortunately, your death. And that is a very big need in the industry, in the world. And that's a need that pulls on the heartstrings. But more than that, and this is often missed or not always talked about, but it's the need for life insurance if something, God forbid, happens to you while you're still alive. And you still need to take care not only of yourself, but also your loved ones. And you've got debt to settle, and you've got various other responsibilities. So it extends further than just something that happens on death, but something that happens if unfortunately you become disabled or you suffer a critical illness. The disability may render you unable to work, earn income, and illnesses. There are many costs associated with that, not just hospital bills, but costs associated thereafter. Can you still work? What kind of lifestyle changes do you need to make in order to continue to live? And at that point in time, the last thing you want to think of is, from a financial point of view, how am I going to take care of everything?
Okay.
And maybe not 5 things, but in general, I would say those kind of 3 things. You need to think about taking care of yourself, your loved ones, and any other responsibilities you may have on death, disability, and if you suffer a severe or critical illness. And that's very important. Extending further than that, I do think there are other costs, but for most clients, those 3 are the most important. And if you take care of those, you'd be taking care of 95% of what you could ever need.
Okay, fantastic. Now, it does feel like most insurance companies have been able to provide that service. Now, the quality of that service may be in question, The reliability of the service might be in question. But then how is peer-to-peer going to reduce those risks or encourage me to go further than I would in terms of cover?
I think it's a trust element. Fundamentally, what you're buying is an insurance product, but what you're doing is you're putting trust in us that if something happens that you were taken care of, or you or your loved ones will be taken care of. And what we're saying to you here is that, there is little to no incentive. There's no incentive for us to not take care of either you or your loved ones, and put that trust in us and have us take care of you in your time of need. And that is achieved through, again, the peer-to-peer. You pay premiums, claims are paid. What's left is the users and shared amongst the users. There's no no incentive from our side.
So I really want to sort of discuss the business model. I hate to do this, the pyramid model, the different types of business models out there. But how does it come full circle? For instance, you gave us the basics and the history of how insurance started. But then how does the peer-to-peer technology make it different? It does sound kind of similar. With some tech background, maybe you can give us more insight.
I think the similarities is, at least it's sounding similar, hopefully is a good thing, so that when people think about it or when they hear about it, it's not a new strange thing that they need to become accustomed with. So you're saying how we make it full circle?
Yes. So I'm talking about the business model itself. How does the business model work for both parties?
So for us, at the end of the day, we are managing the policies. Like I said, we do take a fee for management of the policies.
Okay.
And we are not interested in profiting off of claims not being paid or the experience.
Okay.
And our business model and our business case is not reliant on that. Yeah, that's exactly the point. I think, the circle, if you expand the circle from not just applying to a business, but applying to the clients, the business involved and other parties, you kind of hit a snag where the incentive of the insurer starts to be questioned. And that snag kind of makes the circle completion quite difficult because users, it comes down to trust. But if users don't have trust, then they're not buying the products or they're not buying what they need or they don't know if they'll get it and they might never get it. If you help put trust back in, I think you complete the circle of making sure that everything works the way it should, that insurance achieves what it is set out to achieve. And I think fundamentally that's what we're trying to do. As a business, like I said, the fee is what we get, that's for services rendered, and that's how our business model works, and more than that we don't need, and we're happy with what we get out of it. Okay. We want to provide clients with very good cover, very easily, at very affordable rates. That's what we're after, and we're happy in the process.
All right then. So something else that makes people happy is making sure that they're making some kind of money. Everyone wants to hear that their money is, should we say, at least the money is being put to good use. Now, I'm reading this. You say OneSpark has almost doubled this to 70% by embedding smart tech and AI into the foundation of their product. How were you able to do that?
Fundamentally, the AI enables us to very easily assess the risk that is posed by a specific client. Sorry to get technical, but insurance is about risk, and us being able to assess risk as well as we can enables us to make significant savings elsewhere. The process is simpler. That means you don't have many other people involved. You don't have to do medical tests for every case. You don't have to have a person there sitting assessing all of the information, getting various different parties and entities involved in the process. That saves a significant amount. Your distribution changes significantly as well because you're able to sell it all and do it all online. Other than that, we've taken a different approach to how we want to make the business run, and that means the saving we can generate clients is absolutely amazing. Like we said, up to 70% premium saving. And at the end of the day, what we hope that encourages clients to do is to take out the cover that they need. No more worry about the premiums being very expensive. We're saving you a lot. Take out what you need or what you feel you need.
All right.
And we'll put your money to good use.
All right, then. Now, there was something that interested me. I went to the website and I saw this quote. It says, at the moment, traditional life insurance is analogous to locking into a contract to buy the exact same white T-shirt every year for the rest of your life, regardless of how your body changes, materials advancement, color preferences, style changes, or possibly your weight. Let's just put it that way. Now, obviously, it doesn't make sense anymore. And you say this is the world's first pay-as-you-need life insurance model. So your needs change. Give us an example of the sort of needs that change over time and how this model is preferable.
I think the easiest or the most applicable kind of example is having children. Having children is probably the easiest one to start off with, but many other changes that happen, you build up debt over time, or your family structure changes, not just from having children, but, other people being financially dependent, or manner or the extent to which they are financially dependent on you changes. Clients get promotions, all of these kind of things that ultimately change their financial need. What this pay as you need really comes down to is we want clients to pay what they need when they need it.
Okay.
Instead of saying, we're looking at your circumstances now, and based on that we'll make it's not really a thumb suck change, it is changing it with inflation, but inflation does not align to your needs. Your needs change every year based on how these other factors change. And we're saying, we're assessing that and we're going to change with it. So when these changes happen, we're there with you, we're changing with you and making sure that the cover you need, you get, and you pay only for that when you need it.
All right. So now I want to talk algorithms, I want to talk AI, I want to talk machine learning. Now, whenever I hear peer-to-peer, I think blockchain, I think financial transactions, and I think of, how the world has changed over the past at least 10 years now. So how similar is this AI, is this algo with what is happening in the financial sector now? And talking about blockchain technology and cryptocurrency.
Interesting. We're not there yet.
Okay.
I think that the easiest place to extend that to is, and I don't mean to sound crude at all, but would be something like death, a very simple death. The unfortunate reality is that life insurance is a little bit more complex than just always. It's either, it's not black and white always. There are many in-betweens. And for something like a blockchain to be used, you probably use smart contracts, and then based on certain circumstances being met, you would facilitate, or a payment would be created, or the transaction would be completed. I don't believe that the counterparty services exist that would allow that to be, fully on blockchain. What I mean by that is, let's talk about a disability claim. If a disability claim happens, there are certain requirements that need to be met, and there are certain things that need to be done as part of the process for the requirements to be met. If you have a counterparty that offers a service like that through blockchain, then what you'll have a smart contract that says if these requirements are met, then the transaction will enact, or there will be a transaction that happens. But I do think we're still some way away from at least the more complex cases. Like I said, something like death is probably where you can move, but we're not there just yet.
Okay.
I think that is the ultimate place that you'd want to get to from a transparency and putting trust back into it, because at the end of the day, then exactly what happens, and the counterparties of the parties involved are not incentivized to do anything other than what the transaction says it should do. But keep your eyes on us. And
all right then.
I think there's some very interesting things coming out.
It does seem like you guys are moving fast. Now, I'm not sure what position this puts OneSpark in right now, in comparison with other insurance companies that are presently in South Africa. Have you sort of, given an eyeball to the competition to see what they're up to? And where do you think this is going to place you in the next few years?
I think we'd be silly not to keep an eye on the competition and seeing what they're doing. We've spent a lot of time analyzing the market, making sure that what we provide is as good as we say and achieves what we say it would achieve. But given where we are at now, I think our attention is solely focused on making sure that what we do it as good as we can, be the best at what we can do. I think a lot of the players, with what has happened recently across the world with COVID and the lockdowns and all of those kind of things, have realized that they also need to change how they do business, or have the ability to do business differently. So I think that puts us at an advantage, because we started off knowing that is how we wanted to do business, and these other players have now realized that they need to change the way they do business. So there are people that are catching up, or that are trying to catch up. I don't think they're there yet. But we'll always keep an eye, and if they get close, we'll probably have to accelerate and put the foot down a little bit more. Yeah. The South African insurance industry, specifically life insurance industry, is very developed, probably amongst the most developed in the world. So you will see good things coming out here, but we believe we are the best coming out.
All right, then.
Currently.
And with this advancement, I have to say it is extremely intriguing, and I see great things in the future for you guys. So for now, all I've talked about is life insurance and funeral cover, but I didn't really talk about things like auto insurance, insuring your property, fire and things like that. Have you made moves in that direction yet?
We haven't currently. I think that is a space where a lot of the tech that we're using has already been introduced or is also being used.
Okay.
And we really felt that life insurance was due for a shake-up first. That is an obvious place to extend our services to or where we offer. But at this point in time, we are focusing on the life side. But be on the lookout. I wouldn't be surprised if we enter some other markets too.
All right. Fantastic. Okay. So I think we've just about covered it. But for, the new customer, someone listening right now, who's wondering, what the first steps are, could you give us like a step-by-step process as what to do if I'm interested in your products?
Simplest would be visit us at www.onespark.co.za. From there, we explain the product. We provide a lot of detail, hopefully in a way that's easy to understand while not looking too unfamiliar. And clients can just go through the process there and then get a quote in 10 seconds and complete the process in as little as 3 minutes time. In as little as 3 minutes.
That's a big promise. I could try it out. Right now and see what happens. But I guess you guys have it covered. Do you see what I did there? Have it covered? All right then, Francis. It's been a pleasure talking to you.
We should have you join us.
I've been thinking about it actually, but I'm not sure how that works. Nigeria to South Africa, whether you'd insure a Nigerian. Would you do that? Outside the country?
We would need to assess the risk.
Okay. Well, hey, you know what they say about a Nigerian. Nigerians can survive anywhere in the world. All right, then let me see if I can give out your profile in just a bit.
Perfect. Thank you very much, and thank you again for the time and the opportunity.
You're welcome. So you have my email. If there's any new updates or interesting stuff I could get involved with right here from Nigeria, just give me a shout.
Absolutely, will do.
All right, then. Bye.
Thank you very much. Have a nice day. Bye-bye.
All right, I'm speaking with Francis Gill, the head of actuarial at OneSpark. And they have something really interesting to discuss today. It's all about the world's first AI-powered pay-as-you-need and peer-to-peer life insurance model. And it's an interesting conversation to have. Life insurance is something that not a lot of people paid much attention to, but with the advent of new technology like AI, they've decided to put something special together for their clients where they have a pay-as-you-need peer-to-peer product, which is considered a life insurance product like no other. It's about creating a better future for South Africans. And hey, say goodbye to the 100-page application forms, the endless phone calls, the scary needles, and expensive premiums. And of course, the 50-year contracts. Gone are the days of greedy insurers whose complex products allow them to take out profits without you knowing at your expense. And say hello to a completely new type of insurance model. One that's smart, instant, easy, transparent, and has crazy low premiums. All right. So let me just read out something I saw here. And it was really interesting. It says here, at the moment, traditional life insurance is analogous. It's locking you into a contract to buy the exact same white t-shirt every year for the rest of your life, regardless of how your body changes. Materials advance and color preferences and of course styles change. Even your weight changes over the years, and it just doesn't make sense anymore to do the same old traditional life insurance, which is why the pay-as-you-need life insurance model uses powerful AI to automatically adjust your cover every year in line with your changing needs. So you're no longer locked into a 50-year contract. It's a short-term contract. All right. Thank you so much again to Francis Gill from OneSpark for talking to us. We're going to be having a lot more very interesting conversations right here on Africa Business Radio. Hit us up at africabusinessradio.com for more information and to listen to our other amazing podcasts. You can also reach out to us on social media at Africa Biz Radio on Twitter, at Africa Business Radio on both Instagram and Facebook, as well as LinkedIn. Can't wait to hear from you. My name is Titi Layo Oyinson, and I'm at Titi the Dynamite on Instagram and all other socials. And thank you for listening.